If they're lying about something like this, then what else are they lying about? When you make a deposit in the bank, it's actually no longer your money. What's the safest place for your money? The world's a big place. So there are plenty of different countries and jurisdictions where you can move some assets.
Please join us for our next live stream, Sunday, September 22nd at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, September 22nd, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We appreciate your support. Our guest today on SBTV is Simon Black, founder of Sovereign Man, a group that finds the best opportunities around the world and making them accessible for its members. They believe that the power of knowledge can dramatically reduce your risk and expand your freedom and take advantage of worldwide opportunities to increase your prosperity. His belief to be self-sufficient has also seen Simon start his own private investment bank and forays into agriculture. Sovereign Man has also worked with Silver Bullion for years for the benefit of their members. Good day, Simon, and welcome to SBTV. How are you doing?
I'm great, thanks.
Great, glad you can make it here. Simon, can you share with us a little about your background and what got you to start Sovereign Man?
Oh, geez. It's been more than a decade now. So like a lot of businesses, that one was probably started by accident. So I was just, I was traveling around the world. I was, investing in a lot of different things as I went, and it seemed like it was, I started writing about it, and it just became more and more popular over time, and people started reading it, and it's been we just celebrated our 10-year anniversary in June, so it's some cases hard to believe it's been 10 years. Yeah,
congratulations. What was the one or two things that sort of woke you up?
I have this thing, I call it the aha moment, and I think a lot of people have it. For me, I have a military background, and so for me it was actually the invasion of Iraq. So all the U.S. forces, we were all huddled in Kuwait waiting for George W. Bush to give the order to go into Iraq. And it was obvious that whole thing was based on false pretenses that Saddam Hussein did not have weapons of mass destruction. And yet here we were about to wage war, and people were going to die and so forth for reasons that were obviously a lie. And it just led me to this. It was a very dark realization for me, and it led me down a path where I thought, well, if they're lying about something like this, then what else are they lying about? Up to that point, I had always been naive and sort of believed everything the government ever told me, and all these sorts of things. And then it took me down this path where I started learning a lot more about fiat currency and the debt and macroeconomics and so forth. And it was a very formative, transformative experience for me, and series of realizations, and really is kind of what led me to where I am today. But that was it for me. That was back in 2003. So it's been a while for me.
Yeah, and I believe you're a graduate of West Point.
I am, yeah.
I guess I owe you a salute.
That's okay.
Okay, but why did you start your own investment bank, and what's unique about this bank?
Well, look, I'm a longtime entrepreneur and investor, and I've started a number of different companies, some big, some small. Several years ago, I founded an agriculture business that has become quite large, quite a prominent producer, one of the largest really in its industry. And it was a fairly large project, and having to bring in tens of millions of dollars into South America. And it turns out that's actually a fairly difficult thing to do. And it turned out to be quite complementary to that business to actually have a bank. And I realized that at the time, as I was traveling around the world and dealing with banks everywhere, banking, ever since the United States passed a law that's known as the Foreign Account Tax Compliance Act, which I know you guys are very familiar with. FATCA, as it's called. Banking has just really become a terrible burden. Bankers used to be business people. They were very entrepreneurial. They just wanted to do business. They wanted to do deals. They wanted to get stuff done. They wanted to facilitate capitalism and commerce. And now banking has become really the exact opposite. It's become an obstacle to business. Bankers are no longer business people. They're no longer entrepreneurial. They're no longer value creators. Now they're just bureaucratic stooges that, lord over commerce, constantly squashing the most innocuous transactions with mountains of regulations, treating their valued customers like criminal terrorists and suspects instead of the valued customers that they are. And I just got so tired of that. I got tired of constantly. You go to the bank to withdraw cash, and they treat you like a criminal. And they say things like. One experience where, going to the bank and saying, wanting to withdraw some money, and you talk to one person, and then they bring in another person, and then another person. Another person is like, what's going on? I just want to withdraw, a couple $1,000s. Say, well, before we can release our money to you, we need to, make sure that we can get to the bottom of whatever the purpose of this cash is. And it's like, excuse me, your money? We're talking about my money, But that's the way it is today in banks. And a lot of people don't realize this, is that when you make a deposit in the bank, it's actually no longer your money. That money now belongs to the bank. It's on the bank's balance sheet. It's the bank's asset. And they have every right to freeze you out of your account. I mean, it's just really so precarious. I got so tired of it, I said, screw it, I'm going to start my own bank. And it just happened to also, as I mentioned, coincide with also really great benefits from some of the businesses that I had started at the time as well. So it was the perfect complement.
Yeah, I understand you're also the founder and chairman of Agricultural Land Corporation in South America, one of the largest agricultural producers with thousands of acres, top quality farm land.
Well, for our industry, I mean, there's in agriculture is all about scale, right? So yeah. If you're producing corn, if you have a few thousand acres, you're tiny. But for different types of higher quality fruits and things like that, several thousand acres is actually quite large. It's huge.
Okay. And I understand you're in Chile. What made you select Chile? Was it the land, the fertile land that it may have had? Was it the government jurisdiction?
Sort of all the above, right? So again, agriculture is all about scale. So our land costs in Chile are literally, a tenth of the price of even less than that. I mean, we have colleagues in North America who pay, they'll pay $60,000, $70,000, $80,000 per acre in some cases. We could pay $5,000, maybe $8,000 per acre. So the land costs are remarkably different. The soil is incredibly fertile. The weather is very predictable. It's great, but also unlike a lot of other places in South America, it's not this banana republic. It actually works very well. The institutions are strong. So it really ticked all the boxes. Lower costs, lower labor costs, yet sort of first world infrastructure, et cetera. So it's been a very good decision.
You're an American, but you spend most of your time in Chile and many other countries that you travel to. You must have gained quite a bit of knowledge about different jurisdictions. And for the listener who may not yet see the need to consider the opportunities in other countries, how can the power of jurisdictions benefit them today?
Well, the idea is that, first of all, the world's a big place, right? 500 years ago, most people never went, beyond 10 miles of where they were born. They spent their entire lives in this village, and that was it. But today, we can get on an airplane and be on the other side of the world tomorrow, and that's pretty miraculous when you think about it. We can push a button on an airplane and turn our seat into a bed and go to sleep and really wake up on the other side of the world. It's incredible. Every country it kind of goes back to basic economics about competitive advantage. And every country really has certain competitive advantages. no country is great at everything. No country sucks at everything. I mean, every country, even North Korea, has something going for it, right? So the idea about sort of international diversification and so forth is to just really kind of identify which are the best places in the world for whatever it is that you're trying to do. And if you think about it as you would, I mean, with your, if somebody's got family and kids and so forth, you probably actually make a deliberate decision and think through, where's the place that I want to live because it's got the best schools for my kids, and these sorts of things. Where's the best place that I want to raise my family? Well, you can think through the same type of analysis for your money. Where's the best place for my money to live, where it's going to be safest and best looked after? Where's the best place for my business to live? Where's the best place to to do X, Y, and Z for my investments? All these sorts of things. You can think through the same analysis, and what you realize is that every neighborhood, every country, every jurisdiction is actually different. Singapore, where you are, has a lot of fantastic advantages in terms of safety and stability, minimal corruption, et cetera. Other places in Europe or South America or North America, et cetera, have different advantages as well. And the idea really is just to kind of step back and say, well, let's not be so provincial anymore. Let's not be so medieval that we only think about what's in our own backyard, within 10 miles of our hometown. If you think about banking again, most people would go and open up a bank account because the bank is like across the street from their house or something like that. And it's in 2019, geography is completely irrelevant. It shouldn't matter what's the location of the branch relative to your house. What should matter is what's the safest place for your money. Where's the best service, or where are the best investment opportunities? These are the sorts of things that matter a lot more than, oh, it's across the street from my house. Those sorts of things. Geography is sort of a vestigial anachronism. It just doesn't really make sense to really factor in to the analysis anymore. So that's just really the kind of thinking about it, is where's the best place for whatever it is that you're doing, your banking, your money, your savings, your investments, your business, et cetera, just like you would think about that with your family.
Yeah. The U.S., I think we both know it's going to undergo quite a bit more changes. Is it a wise idea anymore to keep all your assets, your bank accounts, like I say, your assets, all within the U.S. anymore?
I don't think it's a good idea to do that in any place. I don't think it's a good idea to keep 100% of your assets in Singapore. I don't think it's a good idea to keep 100% of your assets in Canada. The idea behind that really is that if you do that, if you have 100% of your assets in some place, it really just means that you have all of your eggs in one basket. And you are really betting everything that you've ever worked for your entire life and hope to achieve on the stability and continuance and sustainability of this one system. And sure, maybe there's an extremely high likelihood that everything is just fine, but it's it might be a low probability event, but it's an incredibly high impact event. And again, the world's a big place. So there are plenty of different countries and jurisdictions where you can move some assets. You can have some gold and have it over here. You can set up a couple of bank accounts and move some money over here. You can own some foreign property that produces positive cash flow in another place. So you can easily spread your investments and assets into different places to ensure that you don't actually have to take that risk.
Okay. Do you think it's realistic to expect government asset confiscation or assets that may be prevented from leaving a country such as the U.S.?
Look, to some degree, there has asset confiscation is not a future issue; it's a present issue, and in a number of ways. First, I would argue that inflation, monetary policy, is really a form of asset confiscation. They are confiscating wealth from you because every year they are devaluing your savings. They're saying whatever you're earning, whatever you have in your bank account, your investments, so forth, is worth less now because we've gone and printed more money and basically managed the currency. They're very upfront about this. I mean, they're very honest thieves in that way. They don't lie about it. They say, hey, we're devaluing your currency by every year we're going to take 3% of your wealth from you. And they're very upfront about that. And the really amazing thing is that they've actually been able to convince people that this is okay. They've managed to convince people that a little bit of inflation is actually good. And this is astonishing to me because in every other part of our lives, when you go to the grocery store, people don't go to the grocery store and say, hallelujah, the price of eggs is 2% higher. No, of course not. Like people like lower prices. Lower prices are good. But economists and central bankers and politicians have been able to convince people that higher prices are actually good, which is astonishing. And that is really a form of value and wealth confiscation. In the U.S. in particular, though, they also have this thing called civil asset forfeiture, where a lot of people think, oh, that's never going to happen to me, and then it does, where some bureaucratic stooge, some government agency can come in and seize your house, your cash, your car, whatever it is. Some police officer at a routine traffic stop can decide for no reason that they can, they want to impound your vehicle. We actually write about this stuff at Subprime on a pretty regular basis, highlight some of these cases. So that is kind of a form of wealth confiscation. You're talking about capital controls and these sorts of things. Look, anything's possible. There have been very severe capital controls in advanced Western developed nations in our, just within the last several years. After the financial crisis, Iceland, whose entire central banking system collapsed, the government almost went under. I mean, it was really a terrible situation, and they had capital controls in Iceland for a very long time. In Malta, they had capital controls. In Malta, the entire banking system effectively became insolvent, and they had capital controls in Malta as well. So I mean, these are Western advanced first world economies that everybody thought they were doing okay, and then overnight they had to implement these really draconian types of policies and keep them implemented for a very long time. So I think that anybody that says that could never happen is honestly being foolish, and they're taking a very, very big bet. And again, it's very difficult to say what's precisely going to happen and when precisely it's going to happen. But this is why I think the idea of diversifying your assets internationally makes sense, because you spread that risk. If somebody had been living in Malta, back a few years ago when this happened, and they had a bank account overseas, they were just fine. But for people that didn't have that, suddenly they found that they couldn't withdraw cash from the banks, they couldn't transact in the banking system, they were basically stuck. They had no access to money, no access to to really anything. And so these are the sorts of things that can happen literally overnight, as we've seen over and over again throughout history and even in our own recent times.
Yeah, when it comes to things like silver and gold, we often hear people say, if you don't hold it, you don't own it. But knowing jurisdictions and how they work, what would you say to that response? If you don't hold it, you don't own it.
Look, I mean, it's a pretty deep question, right? Because most financial assets these days, in general, you don't own it, right? People think they open up a brokerage account somewhere and they buy shares of whatever, Apple or Royal Dutch Shell or something like that. It's not actually your stock. They're not actually your shares. Those shares are generally held in the name of the broker, not in your name, not in my name. So Apple has no idea who we are. All they know is Charles Schwab or E-Trade or whatever. So this is sort of the, I think, rather precarious nature of financial assets. Again, even bank accounts, it's not really your asset, it's the bank's asset. That cash deposit is on the bank's balance sheet as an asset. You're a creditor of the bank, and in some ways even an unsecured creditor of the bank. So this is the nature of financial assets. Real assets, on the other hand, are things that, sure, you can actually own. And this is one of the arguments that I make a lot about gold, is that if you want to own gold, why bother with an ETF or something like that? If you have an ETF, it's a financial asset. So you've got layers of counterparties between you and your gold. You've got your broker, you've got this ETF manager, there's a custodian, all sorts of, possibly another exchange and so forth along the way, versus having physical gold that you can actually own in your hand. It's an enormous difference. You eliminate all the middlemen and all the counterparties, and that's, I think, one of the really nice things specifically about precious metals, but also about real assets. This is actually also one of the draws of cryptocurrency. It actually doesn't really require anybody else to hold on to that. I never really understood why people deal in crypto through brokerage accounts and these sorts of things, and let some middleman hold all of their crypto for them. And the whole point, I think, is that you can circumvent the middleman and really become your own banker in that case. So real assets, I think, it's a very compelling argument to own real assets, and I think specifically physical gold and silver.
Yeah, I mean, speaking of banking, are you expecting money printing to be on the way soon?
Well, I mean, it's already here, right? So the Fed the Federal Reserve in the United States has indicated that they're going to cut interest rates again. The European Central Bank has cut interest rates again. I mean, we see it all over the world, in Australia, New Zealand, and I mean places even where that's not supposed to happen. And this is the really bizarre thing, really, because you look at the United States. Generally, central bankers tend to cut rates when economies are soft and unemployment is rising and all these sorts of things, but that's not happening. The United States economy is supposed to be, just bonanza economy where everything is going great. Then why are you cutting interest rates? I mean, interest rates are already so low and the economy is doing so well, and yet they're cutting rates. This doesn't make any sense. And yet this is the Fed's now stated policy of what they're going to do. It's just this morning, actually, the Wall Street Journal printed another article about this. They've done this in Europe, where interest rates are already negative, in Japan and so forth. I mean, it's everybody is doing, everybody's doing the same thing. Everybody's just cutting rates, and effectively, that means ultimately printing more money. And we're gonna continue to see more of that, certainly in the future, because that's really the only option that they have.
Yeah, I mean, so let's say we go back into all that QE, negative rates, whatever it is. Do you think it's going to be even worse than 2008? And if you do, how do you think things are going to look like?
Well, I mean, it depends on how you define worse. What we saw in 2008 was it was a ridiculous asset bubble that became a financial bubble, that became a banking crisis, that became an economic crisis. It started with subprime and, banks that were loaning, and the subprime bubble got so big, that eventually ended up creating insolvency in entire banking systems. And the insolvency got so huge that it brought down, again, like in the case of Iceland, almost entire economies, entire governments. Where do we see that sort of bubble today? Honestly, there are a lot of bubbles today, and I write about this a lot in Sovereign Man. I mean, you can see in financial markets valuations that are really stretched, price earnings ratios, price sales ratios, price book ratios. You see companies like WeWork that burn through investors' money that are worth tens of billions of dollars and so forth. Although I just saw another article that WeWork has finally capitulated and they've reduced their valuation to a more sensible level. But the point is, we see these sorts of bubbles everywhere. But I think the biggest bubble is in finance, particularly in the bond market. So there's, depending on the month, depending on the day, 12, 13, 15 trillion dollars worth of bonds in the world that have negative interest rates, negative yields. So what does that actually mean? It means that essentially you come in and you pay a certain price for a bond. Bonds trade, they have prices just like stocks. So the price of Apple or Disney or Tesla stock goes up and down. The price of bonds goes up and down. And so but those bonds provide income. And the idea is that you actually pay more for the bond up front than you'll receive in future payments, over the next 5, 10, 30 years even. So that's what negative yields really mean. And it's incredible, to think about. There are countries like Japan that are literally bankrupt, insolvent, yet they're able to go out and price their bonds at negative yields. It's unbelievable. But these words like unbelievable and unprecedented, they're almost trite these days because we see so many things that are unbelievable and unprecedented. But to me, that's the biggest bubble. That bubble, again, we're talking north of well over $10 trillion. That's way bigger than subprime ever was. As a percentage of GDP, as a percentage of the global economy, as a percentage of the banking system, et cetera, this negative yielding debt is bigger than all of that. And so, and I think it's just as stupid, in the subprime, where you're loaning, there's a great story about, there's a homeless guy who was able to get $1 million worth of loans with no money down to go and buy real estate. And you look at it and go, like, what kind of idiot would do that? But at the same time, you got to go, what kind of idiot would loan money to a bankrupt government for 10 years at negative rates? What kind of idiot would do that? So it's not really dissimilar. It never is. And for somebody to say, oh, this time is different, again, those are the most dangerous words in finance. So if you compare where we are today to 2008, there's more debt in the system. Debt nominally as well as a percentage of GDP on a global basis is higher. We see the bubble with respect to negative yielding bonds is far greater than subprime ever was. So there's a lot of things that are sort of working against us. We also, there hasn't been a recession in a long time, and just because there hasn't been a recession in 10 years doesn't mean that there has to be one. It's not like it's on a timetable or a schedule, right. But it certainly stands to reason that we're probably closer to having a recession and a correction because it really has been so long without one, and we see a lot of issues like these, negative yielding bonds and so forth that are circulating out there. But again, nobody knows. Nobody can say for sure exactly what's going to happen or exactly when, which is why, to me, I think the name of the game, the most important thing is just to do sensible things that sort of make sense regardless of what happens next, regardless of what doesn't happen next, and when. So I think owning some gold and owning some silver, like that just makes sense when you're living in a time where there's, $10+ trillion worth of negative yielding bonds. It probably makes sense to own a little bit of gold when central bankers are slashing interest rates, even at a time when their economies are doing so well. It probably makes sense to own some gold as a hedge, as a bit of an insurance policy. That's something that makes sense sort of regardless of what happens or doesn't happen next. I think it's a bad idea. I've occasionally run across people and they've told me like, yeah, 100% of my net worth is in gold. And I think to myself, okay, well, that's pretty stupid. To have 100% of your net worth in anything, again, you're putting all of your eggs in one basket. It's just probably not a good idea. But certainly to own some gold as a hedge, against, I think, some obvious risks that are out there in the system, just something that's completely sensible.
Yeah, I hear you. Completely agree. Simon, you've known Gregor, the founder for Silver Bullion, for many years, and you've even visited us in Singapore on a few occasions in the past. I'm sure you've visited other vaults in your travels. Can you just share with us a little bit about your experience visiting vaults and how the safe house compares with other vaults you've visited?
Yeah, sure. I mean, I'm happy to be happy to comment on this. I think I've known Gregor for many, many years, and I have. Despite our friendship, I'm always very objective about it. I think there are so many things that Gregor does very well. I mean, he obviously, Gregor is actually to say gold bug isn't even quite right. He's more of a silver bug. Yes. Which I'm not disagreeing about. I think Gregor's got a lot of very compelling reasons for silver and obviously gold as well. And I think silver makes a lot of sense just as gold does. I think Gregor built the whole facility from the ground up as a guy who wants to own gold and silver in the safest place, in the way, Gregor really thought like, okay, if I were somebody who was going to store this stuff overseas, what would I want to know? And so he's really wants to answer these questions like, how do you know the gold's there? How do you know it's actually real precious metals? How do I know you're not going to steal from me? How do I know whatever? And he's designed it with I think, very strong, the best German efficiency in a way that he's been able to achieve things that as far as I know, almost nobody else has been able to achieve. It's a weird little nuance, but it's actually a big deal. Silver Bullion has on its insurance policy, they have a rider for mysterious disappearances, which is something that sort of is almost a catch-all, just in case, if something happens to your gold and nobody can figure out what happened or why, the insurance company will still pay you out. And that's something that, as I've come across, I don't think I've seen anyone else able to do that. And the reason that it's a huge deal, because it means that what Silver Bullion has done in the safe house, what they've done internal in their own storage is so remarkable that the insurance company is like, okay, well, we really trust these guys and we're willing to underwrite this sort of catch-all risk. That's a big deal. Another big thing is, most places are just brokers, and then they outsource the storage to, Viamat or whatever. And so they're just really middlemen. But Gregor's taken everything in-house, and I think that's a pretty big deal as well. Obviously, the peer-to-peer lending is, I think, a huge advance in the marketplace, and I'm convinced. Honestly, I'm shocked that that's not one of the most popular investments in the world right now. But I'm honestly in no rush for that to be widely known. There's really quite a number of things. Obviously, the fact that they, you guys have the testing equipment also there in house, so somebody can bring in gold and know that it's actually gold, it's real bars, it's real coins. But I would say one thing that I've really noticed that's important to me is transparency. And so there are other vaults, and I won't mention anybody's names, where we've kind of gone to them and said, well, look, if we're going to make a recommendation, and this is the sort of thing in Sovereign, I mean, we've made 10 years in business, we've made recommendations. We don't take fees, we don't take commissions, we don't take anything like that. We're like Consumer Reports. We're 100%, our subscribers pay us for objective information, and by God, we provide objective information.
Yes.
And so, it doesn't matter. I mean, people offer to pay us, offer to bribe us, honestly, all the time, and we just don't do it. The integrity of the organization means way too much. But I'm not going to disparage anybody publicly, but I would just say sort of anonymously, like there are a lot of places that we go to where we say, look, we'd like to see your financials. Because before we make a recommendation for your firm, we want to know that you're solvent. We want to know that you actually run a profitable business and are going to stay in business, and you're not going to go out of business in 6 months, and what's going to happen to somebody's gold and all that sort of stuff. And they say, no, we're not going to share our financials. They say, well, we're just not going to do business then. And so that's actually a really big deal for me, is that, Gregor's actually incredibly transparent about sharing that sort of information with us, so that we can see, really that they've got a very well-run organization, that it's profitable, that, it's solvent, has a pristine balance sheet. This is the sort of stuff that you want to see if you're trusting your wealth to another organization. So those are the things I think that, Silver Bullion is doing incredibly well.
Okay. One more question. I was going over your website today, and I read the story about Hong Kong. Do you think they may depeg? Do you think that may be something on the table right now?
Oh, I think it's definitely on the table. The peg's been in place for almost 40 years, basically, and that's sort of the thing. I mean, it's you used to be able to have a lot of confidence that the peg was going to stay in place, and the point is that now I just don't think you can have that same level of confidence. The big reason for that, really what's changed in the last, year, basically, is a couple things. I mean, one is, sure, there's the potential pretext of Chinese tanks rolling in the streets, but that doesn't really affect the Hong Kong dollar, the Hong Kong Monetary Authority. One of the biggest things is that this guy, the guy who's the CEO of the HKMA, essentially the Central Bank of Hong Kong, his name is Norman Chan. A few months back, he announced his retirement, and he's retiring at the end of this month. So this guy's got, 3 weeks basically until he's out of office. And as I wrote, it remains to be seen whether or not Norman Chan's successor will share his enthusiasm for maintaining the peg. It made sense in the early 1980s. It even made sense in the 1990s. It even made sense in the early 2000s, when China was still rising and the Chinese still needed Hong Kong as a way to engage with the world. I mean, the Hong Kong dollar to the Chinese represented an easy way, to have U.S. dollar convertibility to be able to trade with the U.S. and so forth. But they don't need that stuff anymore. Hong Kong doesn't need to rely on the U.S. for credibility. The Chinese don't need the Hong Kong dollar to engage with the rest of the world. I mean, none of this stuff is really a benefit anymore. And so if you look at it just on a pure cost benefit, the cost is, Hong Kong gives up a lot of economic sovereignty because they have to mirror U.S. interest rate policy in order to maintain this dollar peg. And for what benefit? It's not really moving the needle anymore. It's like, okay, wow, we get to convert to US dollars. Big deal. I mean, if you think about by comparison, Singapore shares a lot of the same things with Hong Kong. It's a trade hub. It's a financial center. It's really well capitalized, great banking system, all this stuff. Singapore's not pegged to the US dollar, and it does just fine, right? So if you look at it on that basis, the peg the cost is too high. The benefit's just not really there. And so that, to me, and the fact that now the guy who is, for so many years, a champion of the peg, now he's, now he's retiring.
Simon, before we wrap up, can you let our listeners know more about Sovereign Man and the benefits of being a total access member?
Well, I'm not here to pitch anything. I just wanted to talk. So you guys asked me to chat a little bit. So I was happy to do so. But if anybody wants to check out our website, it's sovereignman.com. I generally send something out every day. It's free. We have other products as well. But like I said, I'm not here to pitch anything. So just happy to answer your questions.
Well, Simon Black, we thank you for coming on the show, and you're too humble a guy. I will direct people to your website. You got too much good info there. So we appreciate the time that you've given us.
Okay. Thanks very much.
All right, Simon. Take care.
Okay.
Thank you very much.
All right. Bye-bye.
That was Simon Black, founder of Sovereign Man. For more of his insights on internationalization and global opportunities, please visit his website, sovereignman.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do find SBTV podcast on iTunes and Spotify.